My name is Dr. Deepika Tapadia, Management, Jagannath University, Jaipur. Today I'll be discussing about some very important concept of accounting, that is debit and credit. What do you mean by debit and credit, and basically what are the golden rules of debit and credit? Based on these rules, overall accounting work. Without debit and credit, no accounting or no accountant can access their work. So these are some basic rules. Firstly, types of accounts. We have basically three main types of account, and these accounts have some basic rules. First is nominal or temporary account. The account related to all the incomes and expenses of the company, it comes under your nominal account. Say for example, interest account, rent account, salary account, etc. Second account is personal account. Account of natural person like Ram account, Shyam account, Kamal account. Account of legal person, that is Kamal and company, Ram and Shyam company. These are legal person, or we can say artificial person of the company. Next is capital account. Third important type of account is real or permanent account. These are account of various assets and goods like building account, machinery account, debtors account, purchases account, sales account. So these are the main three types of account, and there are some golden rules. Based on that rules, we place the details. Firstly, what do you mean by debit and credit in terms of accounting? Debit is basically the left side of accounts. The left side of account part is known as debit. Thus, amount written on the left side of the account are called debit. Next is credit. What do you mean by credit in terms of accounting? Credit is the right side of the account. The detail shifted and posted in the right hand side is always credit. Thus, the amount written on the right side is known as credit. Next, types of account. Like say for example, we have few types, and based on that types, increase and decrease are made, and based on an increase and decrease, we debit and we credit the account. Firstly, asset. When the asset increases, the account will be debited. Like if the building increases, we will debit the account, and when the asset is decreases, we will credit the account. Next, liability. When the liability will decrease, we will debit the account, and when the liability will increase, we will credit the account. Liability and asset are just opposite. Next, equity and capital. When the equity decreases, we debit the account, and when the equity increases, we credit the account. Next is income and revenue. Income and revenue generated by the company. If the income and revenue decreases, we debit the account, and when the income and gains of the company increases, we credit the account. Next, expenses and losses. When the expenses and losses of the company increases, we debit the account, and when the expenses and losses of the company decreases, we credit the account. So based on the debit and credit of these types, we have different entries, debit and credit, based on increase and decrease, and it is different on different types of accounts. Next, very important, some golden rules of debit and credit. Basically, we have three accounts which we have already discussed, that is personal account, real account, and nominal account. The basic rule: personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all the expenses and losses, and credit all the incomes and gains. So first we'll start with the first account, personal account. Debit the receiver and credit the giver. Say for example, cash paid to Ram. So Ram is receiving the cash, so Ram account will be debited and cash account will be credited. The second example, Cash received from Kamal and Company Limited. The company is receiving cash from Kamal and Company Limited. So Kamal and Company will be credited and cash account will be debited. Next is real account, and the golden rule of real account is debit what comes in and credit what goes out. I'll explain this with the help of example. Cash received from Ram. We are receiving cash from Ram. So cash is coming into the company. So cash account will be debited and Ram account will be credited. Second example, building sold to Ram. We are selling the building to the Ram, and building is a fixed asset. It means asset is going out of the company, asset is decreasing. So decrease in asset means building account will be credited and Ram account will be debited. And last account is nominal account. The last rule, debit all the expenses and losses and credit all the incomes and gains. First example, salary paid in cash. We are getting the salary in cash and company is paying the salary. So salary account will be debited as business is paying salary and it is an expense for the business. Next, interest received from bank. We are receiving interest from the bank. It means interest is income for the company. So interest account will be credited. So these are some of the golden rules, and based on these rules, overall accounting, the fundamental of accounting works. Thank you so much.